And today we are going to dissect exactly what Powell had mentioned in his testimony yesterday and how it's going to impact the dollar in the future. And also going to give you guys a technical breakdown on GBP Euro, GBP USD as well as Euro USD because there's some good opportunities in the market there as well. Yesterday I asked you guys to just tell me how long you've been trading and what it is that you're struggling with, and I want to say thank you to the guys who has provided me with that feedback. Now, without any further ado, ladies and gentlemen, let's jump straight into the video. Now, firstly, we need to go back to what Powell had said before. Now, this is an article from CNBC, and it says here that Federal Jerome Powell had began 2 days of testimony in front of Congress. One was yesterday, and the next one is today. He said that so we know that earlier this month the Feds had hiked the interest rates by 75 basis point or 0.75% point. Clearly today 75% basis point increase is unusually a large one because that's not what the markets had expected. But Powell had said that if inflation is not getting under control, and then inflation went higher, and then he came and gave us a 0.75, and he also said that he doesn't expect moves of this size to be common. He added, however, that he sees the central bank raising interest rates by another 0.5 or another 0.75 points next month, which is next month and not this month. However, it's very important to highlight that the CPI data that we received this month didn't look that genuine as well. So the question is, can we expect another 0.75% interest rate hike or not? But we're not here to speak about that. That's something I'll probably cover as we get closer to the date for the Federal Reserve to hike the interest rate. What Powell had said, however, that they are fully committed to bring down inflation. Now, yesterday we saw the Nasdaq, the S&P 500. They ended with a slim loss after they had some good bullish momentum yesterday, and the market started taming down slowly after digesting what Jerome Powell had said yesterday about the central bank, their main aim to bring down inflation. Now, like I said before, always when the inflation is high, interest rates goes up and the stock market tends to go down and unemployment tends to go up because people start losing their jobs. Now, that's basically how the economy works. Now, it's also sad that it's not just the US, but we've got South Africa, we've got England, we've got Switzerland, we've almost got a lot of countries in the world is currently sitting with high inflation, and that is going to have a severe impact on the economy and the consumer in particular. People are going to start losing their jobs, and it's going to get very bad before it gets very good. But that's the thing with what happened during COVID. Interest rates were low and people thought it's a good time to make money, it's a good time to go and spend and buy cars. And now people's cars are getting repossessed because of interest rates that's continuing to increase, and people cannot keep up because their wage, it doesn't fall in line with inflation. Now, we also know that so we know that major US indexes had also erased losses following Powell's testimony before the Senate committee yesterday, but then faded into the close, like I said. So we saw that bullish momentum on the stock market yesterday, and then as the market started digesting what Powell actually said, they were like, no, we can't buy this because clearly they're not ready to stop hiking interest rates. Powell said that the Federal Reserve is strongly committed to bring down inflation that is running at a 40-year high, while policymakers are trying to cause a recession in the process. Now, I've explained how this recession is going to take place, and if you do need further information on that, you can go and check out a video that I've done on that before. Also, so it's important that you if you want to know how this recession is going to take place, then I suggest you go and watch that video I made about the US recession as well. But the problem now is investors are now running up and down because they're trying to assess exactly how far the stock market's going to fall as they weigh the risk to the economy with the Fed hiking interest rates to temp down surging inflation. So we know that again, when the more inflation continues, the more the stock market's going to collapse. It's going to come down, and this year, my friends, is going to lead to a recession, a US recession. And that's why I said the best thing to do now is to invest in gold. Moving along, the S&P 500 also, we know earlier this month fell 20% from where it was in January at its all-time high, confirming the definition of a bearish market. Now, I said this so many times before that the stock market is in bearish territory, but the benchmark index last week logging its biggest weekly percentage drop since March 2020, my friends. Now, if you remember back in the day, we had COVID that came out, then the stock market plummeted because a lot of people was not working, the supply chains slowed down, China went into lockdown, and all of that sent the stock market plummeted. Now, if you think that was bad, we now saw that the stock market is more bearish this year than what it was in 2020. And think about how bad 2020 was. It's worse. It's gonna get worse. The markets will continue to be volatile. There is no way out of the woods yet. People know exactly what they have to do, and it's sad though, because why, if you think about it, like if you think about it in general, right, people, the consumers, they don't understand what's going on. People that are sitting at the bottom of the barrel, they don't know what's happening. The guy gets up in the morning, he goes to work, he doesn't know that he's on the brink of losing his job because of what's currently going on. You see people sitting in traffic every morning driving to work. They don't know what is about to happen. There's a forecast for the petrol here in South Africa to go hit 27 rand. How is people going to survive? But people don't know these things. People are back and forward. People are just walking with flaps like a horse to work and back, not knowing exactly how they're going to be impacted by what's about to come. An article that read that South Africa is about to hit the highest inflation this week as interest rate hikes loom. How, my friends, how do you think people are going to get out of this? That's a question for you guys. Tell me, give me some ideas. How do you think what do you think consumers can do to overcome the economical crisis that we are currently faced with? Let me know down in the comments below, my friends. But in any case, because of what Powell said yesterday, we can expect the momentum of the dollar index to be bullish. So we can expect the dollar index to increase in value and this to start melting to the downside. Now let's do a technical breakdown on here very quickly, my friends. To start on the monthly time frame, again, it's clear the market is currently testing strong support. It's unfortunate that there's still a lot of space to the downside, like Rose that when she sat on the Titanic and couldn't get Leonardo on board. But unfortunately, if she was sitting on this board over here, Leonardo could have just sat there. So the Gbpusd is going to be the one that's going to move in there. So we can definitely expect this market to continue even further down. The market also printed support, broke below that, and it's now testing and rejecting quite aggressively as resistance on the weekly time frame. What do we see from a weekly perspective? The market had just broken a structure, retesting it. We have this long week. We can expect the market to go and clear that week there as well. Now from a daily perspective, what do we see now here on the daily time frame? Now firstly, not that level over there, sorry my friends, let me move in here very quickly. So here from a daily perspective, firstly, if you look left, you'll see that the market is currently also testing strong support. This level over here acted as a strong level of support. Market broke above that, came to test the support did not hold, pulled back, tested at resistance now. You can see how the market had tested it multiple times as support as well, but the market also created resistance at this level over here. Now it's important because we want to see this market move to the downside. we're gonna have to wait for support for the market to break below the support, and then on the retest we can then start looking for that continuation to the downside. In doing so, will the market then also print the right leg of this information, and then we'll wait for the pullback to the neckline and then that continuation to the downside. In doing so, the market will print this information, which is considered a bearish pattern from a technical perspective. Next up, we do have a Euro USD. Now, Euro USD is a very interesting pair, my friends. Now, for those of you that don't know, the Euro USD today came out with their flash, well, not their flash, but with their PMI data. The PMI data was negative at 52 points. The expectation was 54. The manufacturing PMI was 52. The expectation was 54. The flash services PMI was expected to come out at 54.6. It came out at 52.4. So both were not met. Like I always say, anything above a 50 is still fine for the economy, but it's not fine because the euro is fighting against the dollar index and that is like that's not the kind of fight you want to fight, my friends. Now the euro has got a lot to give up over here as well. Now the euro is currently testing strong level of support. There's no question about that. It's called an equal low. Now if you look at this move to the downside here, the euro has got a possibility, not a possibility, the euro has got the next line of structure that we can expect this market to pull back to. So we're going to use that as our take profit level once we get in where we need to. Next up, on the weekly time frame, what do we see now from a weekly perspective? Firstly, we can see how the market is about to print this head and shoulders pattern. Here we've got the left shoulder, we've got the head there. We had the market print an equal low, came back, printed the right shoulder. Now a head and shoulders pattern is normally considered a bearish pattern from a technical perspective. The market also printed this impulse. After an impulse, you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the high to the low of the impulse. Then you can see how the market gave us a confluence of the 0.50. The market also gave us this confluence of this level over here that acted as a strong level of resistance. The market broke above that, support didn't hold, market broke below support, tested it as resistance, confirming that meltdown that we can expect on the Euro USD. Now not like that. Now next up, we are going to drop down on the daily time frame, and that will be the end of the road. Okay, so on the daily time frame, we can see we do have the structure that the market is holding on to, right? This is a very strong structural level in the market. Euro USD is currently trading sideways because the investors were waiting for that PMI data to come out today, which came out today bearish. Now Powell is going to testify again today, but I'm not even going to overthink this situation. All we need to do is we need to wait for the market to break below this level. Then on that retest, we're going to start looking for this massive selling opportunity, my friends, for you guys to make a lot of money. In doing so, the market would not only print their head and shoulders pattern, which is considered a bearish pattern from a technical perspective on the weekly time frame. The market will also print this information, which is also considered a bearish pattern from a technical perspective. We will have the confluence of the head and shoulders pattern on the weekly. We'll have the confluence of the information on the daily. We'll have the confluence of the Federal Reserve going to hike interest rates regardless, and we have the confluence of Powell saying that they are committed to hiking interest rates. So we covered a bearish from a technical perspective as well as a fundamental perspective. Thank you for your time. That's all from my side, and as always, cheers for ears.